Keelan, what do you have to share today for Money Chat?
Well, you won't talk about yourself in this light, so I have to brag for you. So I'm so excited for you and happy for you. Tina won't say this, but she got nominated for the second year in a row at the Washington Association of Mortgage Professionals. It's basically like the Academy Awards for people in our industry. Only 9 mortgage professionals were nominated, Tina being one, second year in a row. The bigger thing about that, which just goes to show how amazing Tina is she doesn't really, you're so busy with everything you have going with all your amazing programs and things and what you're trying to give back to everybody else that you can't spread yourself everywhere. So you're not exactly involved with this Washington Association of Mortgage Professionals. And to get nominated when you're really not partaking in all the things that they do is even a bigger deal because typically it's those that are really involved in the organizations that get the kind of fruits of the labor per se. And so proud of you, Tina. Not surprised at all. And we're taking it home this year. That's what we need. That's what we need to do.
I was nominated last year, but I didn't take it home. So let's see if I could take it home this year. Well, Keelan, thank you for the shout out. I really appreciate it. And, right back. I mean, I just feel really blessed. We've got an amazing team. We're doing some great things together, but it's not a one-man show for any of us. It's a team effort. And, the old saying is you're only as good as the team that supports you. And so I feel really blessed to everything that we're all doing together.
We are a happy family. Let's just say that.
We're a happy family.
Yeah.
So on my mini chat, I'm actually going to just talk a little bit about mortgages. Well, maybe not mortgages, but mortgage insurance, because there's a lot of refinances going on right now, which is really great. Shout out. That's what we do. We're your local mortgage experts. And I do think we're part of the best in the industry, really looking out for what our clients' best need is and what they really need to do. And I see a lot of people talking about mortgage insurance and doing refinances to help clients remove mortgage insurance, but I see people actually doing it, mortgage professionals, when they don't have to. So I want to talk about mortgage removal. So it depends on the loan and how and if you can remove mortgage insurance. So mortgage insurance premium PMI is an FHA financing and required for the life of the loan. So if you're on an FHA loan, you have to refinance to get rid of mortgage insurance. But private mortgage insurance PMI is conventional financing, and you do not have to refinance. So if you're refinancing specifically to remove mortgage insurance on a conventional loan, pick up the phone, call the show. Keelan or myself can do an analysis of what that looks like and whether it makes sense for you or not. Now, Homeowners Protection Act law governs with mortgage insurance. Mortgage lenders whether they have to remove and when they're removing the mortgage insurance for the home. Lenders mortgage insurance, also known as private mortgage insurance, the PMI, which I just talked about in the U.S., is insurance payable to a lender or trustees for a pool of securities that may be required when taking out a mortgage loan. It is insurance to offset the loss in case the consumer is not able to repay the loan and the lender is not able to recover the cost after foreclosure or a sale of that mortgage property. So again, PMI is required on a conventional loan if you're coming in with less than 20% down. Now, today I'm not going to talk about all the different ways that you can take PMI. That's another money chat, but I'll bring it back in a future show because you don't have to pay monthly mortgage insurance. I'll do a shout out there. So automatic PMI termination, once your loan to value based on the original price that you pay for the home is 78%, the PMI will automatically terminate if your payments are up to date. That's one way of releasing the mortgage insurance. Another way is request the PMI removal. Now, you can request the removal of PMI when the loan balance reaches 80% of the original home value when the loan was initially taken out. A PMI disclosure will be part of the disclosure package and list the dates of when you hit that 80% mark. Now, extra principal payments during that time can shorten the time to reach that 80%. So to have the PMI removed, you must be current on your mortgage payments and request the PMI removal in writing. Now, the lender may require for you to prove that you don't have a second loan and to prove that you've got the appraised value or the appraised amount in the home value has not been decreased. Now, this extra 2% this is the key part to this, the extra 2% in the loan to value from the 80% to the 78% is extra money out of your pocket. So mark your calendar when the loan reaches that 80%, because again, it will automatically terminate at 78%. but mark your calendar when you're naturally in that amortization schedule at 80%, because that on a $100,000 loan, the calculation for the cost of mortgage insurance, this would be an additional $65 a month, and you could pay for that time until you reach that 80%, where you could have had it released at 78%. So just on 100,000, you've missed out on $700, which every 100,000 at $700, that can make a big difference. Now, the next way is alternative termination criteria is what they call this. The Homeowners Protection Act dictates that PMI can stay on the loan for no longer than one half of the term of the loan, even if the loan to value is greater than 78%. When half of the term has passed, the lender must remove the mortgage insurance. Now, this is final termination of the PMI might occur with mortgage terms that include an interest-only payment period, or when the loan balance has not been reduced because you're doing a negative AM loan or something like that. Now, here's what the most common is. So I want to talk about this, and this is the request of early, not most common, but something that as a consumer that you see being done, this is what you want to do instead of refinancing your mortgage, is request an early PMI removal. Now, you can request the early removal from PMI when the loan reaches 80% of the current home market value. So once you know that you're at that 20% equity position, you want to make sure you have it, because you're going to have to pay for a cost of appraisal, and you don't want to pay for an appraisal if you don't have the value in the property. But once you have that value, which can actually be combination with paying down principal, extra principal payments obviously would count, and then what your current market value is. So once you're confident you're at that 80% loan to value, which means you have a 20% equity, then you can call the lender, and the lender's required to remove that after they charge you for the cost of the appraisal, and you have to write that letter requesting to have it removed. So that's where I'm seeing people that are doing refinances not knowing that they've got that opportunity to ask to have it removed and pay for an appraisal. So that's your Money Chat. If there's anything that you want to hear during Money Chat from Keelan or myself, just call into the show at 1-800. What is our phone number? 1-855-400-1150. Again, that's 1-855-400-1150. And coming up next on the Money Hour, home inspection Q&A. John Torkelson, a protection home inspection, right here on 1150 AM KKNW after the short break.